Is the real estate market in Greater Central Ohio about to crash? Stick around and find out next. Hey RT family, Ryan Reynolds here with Keller Williams Consultants Realty and your July 2024 real estate market update. So what's going on here in July of 2024? Well, it's just after the 4th of July week, and we were going to look at the three statistics we normally look at, which are inventory, interest rates, and of course, prices. And first thing we'll talk about is really addressing kind of what I said in the teaser. Is the real estate market in Central Ohio going to crash and the price is going to come way down? The short answer to that is no, it's not going to happen. And I'm going to tell you why that's not going to happen as a result of our first three indicators. So the first one we talk about is inventory. Inventory we're going to look at in two ways. One is compared to what it was last year, and then also one compared to the historical measurement that we usually use, which is months of supply. So when we look at compared to last year, we're up about 30%. It's 29 point something other percent. And so we have a lot more houses on the market now than we did last year. Last year we had around 2,000. This year we have around 3,000. That's where you get the 29% increase. Now when you translate that into months of inventory, what we look at is we have a 1 point month inventory supply. And what that means is if no new houses come onto the real estate market in Greater Central Ohio, then it's going to take about 1.3 months to sell everything out. Well, that seems like a lot maybe, but if you understand that a buyer's market is above 6 months of inventory, a seller's market is below 4 months of inventory, and a balanced market is somewhere between 4 and 6 months, you can recognize that while our seller's market has softened a little bit, we're still in a seller's market here in Greater Central Ohio. So that is an indicator that we're not going to probably see a crash. Inventory is too low. Second thing we're going to talk about is interest rates. Interest rates have been kind of hanging out and they've been doing really not a lot of anything for the last month or so. As of today, they're right around 7.01. The Federal Reserve keeps coming out. The chairman keeps saying essentially need more data to make any kind of changes in interest rates. And so what that's telling us is that there's probably not going to be much happening on the federal level to lower or increase rates. And so the bond market looks at that, which is what the mortgage interest rates are tied to, and they don't do much anything, and so mortgage interest rates are staying right about 7%. Now, long term, we're expecting the Federal Reserve to lower rates somewhere in the fourth quarter, maybe first quarter of next year, but a year from now, I would be very shocked if rates aren't below 7% and somewhere probably in that low to mid 6 range. We can kind of come back a year from now and check on me, but that's kind of what I'm expecting, and that's where mortgage interest rates are as of right now. So the last one we're going to look at is sale prices, and that's the one everybody wants to know. Hey, am I losing money or making money on my house? And the answer to that is you're still making money compared to last year. Now, if we look at last year, what happened was in June of last year, interest rates were lower than they are now. They're around 6.5, but they quickly shot up from mid-June until October, probably mid-October, where they topped out around 8.1 or 8.2%. In that time, the real estate market really slowed down or stopped because people started freaking out thinking, well, I'm going to wait for the rates to come back down, or that I just can't afford that in some cases. But when we look year over year as of the beginning of July, in fact, as of the same day in July of last year, we are up 5.3% in Central Ohio. Historically speaking, 4% is the normal. So we're actually about almost 25% above what our normal is. So for thinking about that, and then in perspective with the inventory, we have a low inventory. Our interest rates are actually kind of high, to be honest. They're normal historically, but for most people who have bought a house in the last 10 years, they feel high, and our appreciation is still 25% or so, more than that actually, higher than our historical average. So all those indicators point to the fact that I don't think we're going to see a housing market crash here in Central Ohio, especially with everything we've got going on with Intel moving in and all of the other data centers moving in and Honda and LG doing their thing with the batteries for electric cars. I just don't see it happening. In fact, I personally think that real estate is probably one of the best investments that you can make. It's a good hedge against inflation, and of course, it's a real physical, tangible asset that everybody's got to live somewhere, and so that's where I have my money. That's all we have for this month. Thanks again for joining me. I'm Ryan Reynolds with the Ryan Reynolds team, and as always, unlimited opportunities and exceptional experiences.